Hey guys, this is Brandon, your trusted realtor, and we're getting ready to get you ready to buy a house. Now, buying a home can feel like a monumental task. Like anything the first time, being prepared helps make a difference. So let's get started. Now, we want to begin with improving your credit score because that's a critical first step when you're considering applying for a mortgage loan. Now, for many people, the thought of a mortgage loan or applying for a loan is intimidating. And honestly, no matter the reason, the fear of rejection is a common underlying theme. So let's redirect that energy by demystifying what you should know and what you should be doing when it comes to preparing you to get a mortgage loan. Now, the first thing to take into consideration is regularly monitor your credit report. Now, start by regularly checking your credit reports for the three major credit bureaus. That's going to be Experian, Equifax, and TransUnion. Now, this will allow you to spot any errors or inaccuracies that might be pulling your score down. It's important that you rectify these errors to significantly improve your credit score. Now, remember that you're entitled to a free report from each credit bureau once a year. Also, leverage subscription options that can help you monitor your credit utilization or your credit scores and leverage third-party services. Having this information is going to be pivotal for you to interpret and is going to be key to saving you thousands of dollars. The second is maintain timely bill payments. Now, consistently paying your bills on time contributes positively to your credit history, which is a significant factor in your credit score. Now, a lender is looking at your payment history. Every month, every month the creditors report whether or not you have paid your bills on time, and they report it in 30, 60, and 90-day intervals, up to 120 and beyond. So the longer a debt is unpaid, the more of a negative impact that it can have. So set up reminders and set up auto pays for your monthly bills and credit cards and utility payments and even for loans, so that way you can ensure that you're never missing a payment. The third thing to take into consideration is reduce your credit utilization ratio. Your credit utilization ratio is the amount of credit you're using compared to the credit limit, and it should ideally be below 30%. Now, a lender wants to know that you're using credit, not that you rely or that you're living on the credit. The amount of credit you use is how a lender will interpret how you manage the money and the likelihood that you will repay back the mortgage loan. Now, you should pay down your credit card balances and avoid maxing out your credit cards at all costs. Lower credit utilization can lead to a much higher credit score and much more attractive mortgage loan options. The fourth is avoid opening new unnecessary lines of credit. Now, each time you apply for a line of credit, it results in a hard inquiry on your credit report, which can lower your score. Be strategic about opening new lines of credits or new accounts. It's important to avoid looking or taking on too much debt or too much credit in a new or short period of time, especially if you're applying for a home loan. Speak to a mortgage lender, which is going to be different from a bank or a credit union. You want to make sure that you're in a relationship with a specialist with regard to home loans and mortgages and finances that is not only going to keep you accountable, but make sure you're in the right financial strategy. The fifth is maintain a mix of credit. Now, having a mix of different types of credit lines, whether that's installment debts, credit cards, or retail accounts, can positively impact your credit. However, this does not mean that you should open up accounts all willy-nilly that you don't intend to use. It's also about managing a diverse set of credit lines and doing that responsibly. Now, prior preparation means that it can mean a lot and will save you tens of thousands of dollars in the process of buying a home. And as a buyer, you're at the center of this transaction, and it's important that you've hired seasoned professionals that are able to help you manage and put together an essential financial strategy to make sure that you achieve that goal. Remember that improving your credit is a process that takes time. So be patient and most importantly, be consistent with the practices. Establish good habits and be sure to like, follow, subscribe, and stay tuned in so you're in tune to the latest and greatest on the real estate process. I'm Brandon, your trusted realtor. Take care.